We're talking about hundreds of millions of dollars that are not going into the pockets of Goldman and other institutions. Now, when you have hundreds of millions of dollars being made elsewhere and not in their backyard, I guarantee you they're going to create far more awareness and interest for that product. So I was astonished at how fast, how efficient, and how much. And I think the institutions will be astonished by how much money they're not making. So they're going to have interest as well.
Layer 1 is a podcast and community dedicated to helping you master all things crypto. We'll be bringing you the best interviews with project executives, technical analysis for trading of the most popular cryptocurrencies, and insight into what's actually happening behind the scenes.
As you join us each episode, you're going to hear about tokens, fundraisers, investments, and even crypto conspiracies. But please remember that nothing we say should be considered financial or legal advice.
Come join us on this journey, and welcome to Layer 1.
Alrighty, everybody, we are back with yet another Layer 1 podcast episode. Awesome guest here today, and very impressive background and very impressive project that has been, kind of a little bit under the radar, to be honest. But, we're going to unveil here for you today. But, as always, before we get there, got to kick it over to Q. Q, how you doing this morning?
Having a great, I believe it is Tuesday. We're coming to you on Wednesday. For everybody out there that has been following Layer 1, thank you so much. We're going to have a great episode with John Wu, president of AVA Labs today. Let's hear from John. John, how are you doing today?
Hey, Zach. Hey, Mike. Thanks for having me. I'm a big fan of you guys. So as Zach said, I am president of AVA Labs. AVA Labs is a group of unbelievable, exceptional distributed systems and network engineers. And if I talk about how my path to AVA started, it may give everyone an idea of why AVA is so great and where we are going at AVA. So my background, I think Mike alluded to it, I came from the traditional finance world. I was a tech investor at some pretty well-known funds like Tiger Management, Kingdom Capital. Ultimately, I ran my own hedge fund that was seeded by the Blackstone Group, always investing in technology. And in about 2014, after the crash in crypto prices, I started looking at Bitcoin and investing in this space. And when you work at institutions like Blackstone and Tiger, you just take for granted the amount of back office support, administrative help, and all the resources that are basically blind to you as an investor. My job was relatively simple. I got to go find great things that are relatively undervalued and invest in them. So that was so easy because everything was taken care of me. All the regulations, all the rules, all the governance, all the administrative paperwork flow, that was all done in the background. When I started looking at crypto and when I wanted to invest in other private assets for myself, whether it be a private share in the secondary market like an Airbnb, or even investing in other private equity, venture capital, or hedge funds, that's when I realized how difficult and complex and inefficient financial services was for a normal person. Even for financial institutions, crypto, for instance, back in 2014, like custody, how do you custody this in your fund? How do you settle this? How do you transact this in a way that your OMS systems were updated automatically and integrated to your portfolio? No portfolio management tools. And forget the legal aspect of it. There were just too many open-ended questions. Luckily, I invested personally because I felt like I couldn't do it for the fund and fulfill my fiduciary responsibilities. But even personally, if I went out of the traditional way of investing in terms of how do I pay taxes, how do I do all of this stuff, it just became very cumbersome. That was not just for crypto, by the way. That's for all type of assets, whether it's a private share. How do you find private shares in 14, 15? Very impossible. It's all set up for the big boys and the VC funds in California. Very few platforms out there, but not too many. So because of that, I really wanted to make the world of financial services, financial investing a lot easier. That led me to SharesPost, where I was the CEO of the digital assets group, and we were tokenizing private assets, private shares like equivalent to that of Airbnb or private funds. And that was helpful, and we did it. We worked with the SEC and FINRA. We created a regulatory stack, and embedded that into our tech stack, our marketplace, in reality, back then, it was still not that easy to do. And the commercial application was not all there. The marketplace that we were trying to build is kind of like a chicken and egg. It was hard to get great issuers on, and it was hard to get great buyers on. So the scale wasn't there. Now, that leads up to AVA. And AVA is a first layer protocol, consensus protocol, revolutionary protocol, I would call it. But it was designed with a specific purpose, unlike a lot of other first layer protocols. It was designed to make the world of financial services more efficient. Same mission I had. And ultimately, I think we will get into a world where we almost are able to see a financial asset transfer in value from me to Mike or to Zach as easily as it is for me to send an email to Mike or Zach.
That's interesting, and I appreciate you giving that introduction there. It's funny because most of us in crypto, whenever we hear about kind of the institutionalization, we think that the reason behind maybe the slow process that's occurring, but it is essentially moving forward, is because maybe the big institutions don't believe in the thesis, right, of Bitcoin in general. But what you're kind of saying is that these processes kind of have slowed the adoption of crypto within those big firms. Is that the case? Were people receptive maybe of you talking about cryptocurrencies back in 2014 and 2015 when you were
So
making these personal investments?
the processes slowed individuals from investing in these things. For the institutions, I think they have a different type of barrier. They need to see something that's commercial and scalable right now before they deploy any of this new technology. They're very bottom line focused. Not that they don't want to participate. In fact, many banks, many institutions and financial services are experimenting as we speak with blockchain and blockchain technology, but they cannot just apply it at a whim. They have to see it fully played out. By definition, they almost can't be early adopters. So they need certain things that AVA has been designed to do. They need to have some sort of control, and not because of a centralized greed-driven factor that people like to think of, but because they have to comply. And one thing that AVA has done, Eamon Gunseer, who's the founder of AVA, the Cornell professor, he designed our engine and our platform with features and applications on top of the protocol so that there's features for governance, not just at the smart contract layer, but at the node level. So again, when I was at issuing securities for issuers who came to the platform and wanted to tokenize their fund or their security, the way we did it back then was I would then recommend them, if it was like a real estate related project, recommend to Harbor. Unfortunately, Harbor is no longer an independent entity. And if they were equity, I would recommend to a different third-party issuer. Those guys were your equivalent of IBM or Deloitte or Anderson coming into your IT architecture enterprise and then designing it for a large fee and creating your architecture. In the crypto world in 2017-18, they would come in, these third-party service providers would come in, they would ask you for your specs, they would program those restrictions into the smart contract itself and charge you a lot of money and probably take some of your tokens from your public sale. What AVA has done is, yes, you can do that, but you can also create the validator set that you desire. And the reason is because even though there are certain standards in regulation, each organization has their own level, their own bar that they want to achieve in terms of governance. So you may want a higher bar or a lower bar as long as you're past the regulatory requirements. So given that, you need the flexibility of a governance tool. And if you can control the validators in your node, you have that. The other thing that enterprises did not love was the fact that it's so hard to work with some of these third-party private blockchains and to work with them. They wanted their own IT guys to develop their own tools and be able to integrate easily. That's a second big advantage of AVA. We've made it so it's so easy to use. It's almost like the way Wix is for your website. You drag and click, and all of a sudden you're able to spin up your own token and your own private blockchain.
Yeah, I think we're going to have the kind of enterprise adoption talk here throughout the entire episode. And you know, most of the smart contract platforms or the dApps or the interviews that we have on layer one, have to do with more user facing, more user adoption, not have to do with enterprise. So super interested in that discussion. But before we make it there, I really liked an interview you did recently, and you talked about kind of the genesis of AVA being around that ICO craze. And we were kind of in the middle of this hurricane a little bit, but tell us how the ICO craze kind of like sparked your interest in producing this platform now that can do all of these things that you mentioned.
So very related to your why enterprises or financial services institutions, large ones, would adopt this. So when I saw the ICO craze in 2017, two things really piqued my interest, and I was, basically astonished. One was how fast and how much money was being raised by these projects. And that's important because it seemed very efficient, a crowdfunded raise throughout the world. And secondly, it's important for adoption because if you do the math, and then any IPO at Goldman Sachs or an investment bank gets close to roughly 5% of fees for dollars raised. If you do the 7 or 8, what was it, like, gazillion dollars that were raised in 2017, we're talking about hundreds of millions of dollars that are not going into the pockets of Goldman and other institutions. Now, when you have hundreds of millions of dollars being made elsewhere and not in their backyard, I guarantee you they're going to create far more awareness and interest for that product. So I was astonished at how fast, how efficient, and how much. And I think the institutions will be astonished by how much money they're not making. So they're going to have interest as well. For me, though, it was like, wow, this is an efficient way. But then when I looked at it, I was like, this is not exactly very compliant. I've been in the space of alternatives as an investor and raising money. I have, know the rules. All of these raises in the US were effectively not obeying the Acts of 1933 and Securities Acts of 1934. They weren't relying on exemptions like Reg D or Reg S or 144A to transact or to raise money. So I wanted to do it in a compliant way for the US people.
Gotcha. Yeah, that makes a ton of sense. I'll never forget back in 2017, 2018 timeframe as this was really cruising along, and it didn't obviously look like ICOs were gonna stop growing and fundraisers were gonna continue into the billions. There were, there was a lawyer or two who, basically kind of predicted that in a few years we were going to end up where we are now with kind of that, niche within crypto, that fundraising effort just completely being decimated, and a lot of these fundraisers ending in class action lawsuits. And obviously, for the most part, they ended up being true, and we see a lot of that happening now today, even past just some of the fundraisers. So when it comes to AVA, is the goal necessarily to kind of revive the ability to fundraise within crypto, or are you guys obviously adjusting it a bit to make it more compliant, and what's generally the focus when it comes to issuing some of those tokens?
Right. So the goal of AVA is to enable builders on our platform for financial products and allow them to issue or create tokens and create their own private blockchains, which could be their marketplace, but to do it in a very governance compliant type way. So the goal of AVA is to enable builders, not necessarily to create it ourselves, and enable them to build it on our platform, which will be more scalable because the consensus protocol is fantastic. That's a whole different subject. We can get into it. But our dream would be some guy who's a great developer and has a vision of what a financial product should look like, coupled with a traditional financial services person who understands how compliance and governance works and understands a product deeply. And the two of them coming together using the features and tools of AVA and creating that product on our platform. And they can have a choice. They can either do it in a private blockchain through AVA, or they can do it in a more permissionless way through AVA. And I think you're alluding to the DeFi world that we're also working with. I think DeFi is a wonderful playground because it's sparking a lot of creativity, and a lot of great ideas are going to come from DeFi. As long as they're compliant, it's going to start drawing more of that traditional finance guy into it and saying, wait, just like I was astonished, they're going to be like, this is a more efficient way to do things. And maybe I can create a product here, whether it is a securitization or whether it's a volatility index or some sort of derivative, in an easier way and in a way that can appeal to more people than just large institutions.
Sure. Yeah. DeFi has been absolutely exploding. There's even, some really clear parallels between the explosion in DeFi and the explosion in ICOs that we saw back in the day. Is DeFi really kind of the main, niche that you're seeing a lot of developers want to build within, or is there something else kind of under the radar that AVA Labs is seeing as really kind of maybe the next thing past DeFi or something that exists alongside DeFi?
Well, our goal is to make financial services, instruments, and players have a more efficient platform and a playground in order for them to create, issue tokens, and to trade digitized assets. However, as it regards to DeFi, I think DeFi is where the early adopters are. DeFi is also starting to grow. Unfortunately, there was a hiccup in March, but the growth of that is going to have the same effect as the ICO boom in 2017. Each new iteration of growth in the crypto space will bring more eyeballs from traditional finance into this space. And as soon as the numbers in terms of millions that could be made in traditional rails start to get big, they are going to come and also look. So for us, DeFi is a great, call it area of growth that will only lead to our ultimate vision, which is to allow financial services, assetization, digitization, and trading of assets in a more efficient way. It's the playground that starts the whole game.
Yeah, I find it super interesting when a network kind of approaches it, like adoption or I guess usage on the network in like a dual pronged approach where you have this enterprise that you're targeting, but you also have this idea that you're going to bring users in via DeFi, you're going to bring developers that want to build apps and all these things. So do you have two separate strategies for kind of going about maybe acquiring enterprise level firms and things like that to come and build on AVA, as well as maybe getting, I wouldn't call it mass adoption because I don't like that word more and more, but just getting adoption for your platform from a user perspective?
So first on the DeFi side, then we'll talk about the enterprise side. On the DeFi side, AVA is about to go on the mainnet this summer, and we have a public test net. So if you look at our Discord channel, our GitHub, and all of the interest in our grants and our bug bounties out there, we are drawing a lot of attention from DeFi type developers. So the growth in our channels have been fantastic. And if you look underneath that growth, it's been a lot of DeFi developers looking to test out how good our platform is, if you will. On the enterprise side, because AVA is set up so that it can be both permission or permissionless, we've actually had more inbound calls from various industrial Fortune 500 type players experimenting with blockchain, asking us if we can help them develop some proof of concepts. Now, we are very focused on creating our network right now, but very shortly there will be a few announcements with traditional large-scale enterprise players who actually have come to us and said, wow, we've looked at your paper, we've looked at some of your technology, and what was very interesting to them was they can have their private blockchain similar to what you would create through Hyperledger, I would think more efficiently with us and easier to use. But when they desired in the future and they wanted to open up that private blockchain, allow it to connect to the other sub networks in AVA, they will ultimately have a permissionless. They want that optionality, if you will. They want that choice. So from the enterprise side, the strategy, luckily for us, has been them coming to us. And on the DeFi side, it's been us creating grants, creating buzz in the dev community, and people are coming.
Got it. That's good to hear. And based on that last statement where you're saying people are coming, that's kind of the whole like crux of the conversation, right? When you were talking about smart contract platforms or networks that are being built out, we've seen a saturation of proof of stake networks and even some proof of work networks, although they're not as popular. What the elephant in the room is, how do you compete with Ethereum, right? They've developed this huge flourishing community of not only users but developers and all these things, and the composability on that network has been fascinating. So how do you go about competing maybe with Ethereum? Do you even look at it that way? Is that kind of the philosophy there? What's the philosophy with competing maybe with Ethereum or other proof of stake networks?
That's a great question, Zach. I think a lot of other first layer protocols have looked at Bitcoin or Ethereum as competitors, and they want to be killers of ETH or killers of Bitcoin. That's actually not how we look at it. I mean, Bitcoin's been around for almost 12 years. It is clear that they've created a lot of trust in their community. They're actually going after right now, I would call it the store of value concept, replacement for gold. We're not trying to do that. On Ethereum, they have, like you said, the most developers out there. They are working on scaling solutions, and we are friends with them. We wish them well. We're not trying to compete with them. We're very focused on what we're doing. What we are doing is very simple. We want to create the best platform engine, create the best features, applications for people who want to create financial assets. Everything we do is geared towards that. So that'll be the equivalent. Your question is the equivalent of saying, you look at in the social media space, wow, Facebook is so big. I mean, are you trying to compete with them? We're just trying to do our thing, like TikTok did their thing, or like Snapchat did their thing. And if we do our thing well, I mean, we will have a big community.
Yeah, that makes sense. I think that's a good a metaphor, a good parallel to Facebook there. I haven't looked at it that way, but that makes a ton of sense as we continue to see new and kind of more unique social media platforms continue to bloom. I think the latest really being TikTok on a global scale. So as you look out into the future and understanding that DeFi is really the hottest segment within crypto right now, where do you see DeFi going in the future? You can, get as specific as you want there, or as broad as you want. And then how do you think some of the issues with DeFi as of late, some of the hacks, or, Keep Network just had an issue with some code auditing and a pause, right? And there's just been, over the last 3 or 4 months, kind of some fundamental issues around exploits that go on with DeFi. So, future case, where do you see that going? And present day, right? What does DeFi maybe need to overcome in order to get there?
Right. So I think there was like 3 questions in there, and I'll go backwards a little bit. The last one was, you saw some issues with DeFi, especially MakerDAO and the network congestion happening after Black Thursday in crypto. So they have addressed it, and they have gone past that, and DeFi is growing again, so good for them. But I think when you start, when an AVA is on the mainnet and more people will come, and you start testing our network and our protocol, a lot of people will realize, and this is what the devs who have been testing on our testnet have noticed, that there most likely would not have been that network congestion that contributed to what happened to MakerDAO. So let's just take that small question, put that aside there. The other greater question you had was, where is DeFi ultimately going? Embedded in that is, how big can DeFi be? And it all depends. At some point, a lot of these DeFi projects are going to run into the same problem ICOs had, which is tripping regulation and tripping compliance. I don't think DeFi, being roughly about $1 billion of ETH trapped in the ecosystem, has created enough buzz and hype yet with the traditional finance community to have the scrutiny that ICOs ultimately got. And so DeFi has, in the short term, a lot of runway, and that's great. They need to experiment, but ultimately what DeFi needs to do is to figure out ways to do everything they're doing. If they really want to get big, they are going to have to comply with regulations and the traditional compliance requirements of a regular financial services firm. If you look at DeFi, I kind of look at it like how music industry is. Back in the 90s, you had all these great grunge bands coming out of Seattle, and it was tricky. Not everyone can become Pearl Jam. And it's really the bands that were able to keep their core audience of that grunge scene and then not piss them off, and then transition and create the greater broad audience by complying with other rules of engagement and yet keeping their core strong. That's what DeFi needs to go some point. There will be a few leaders. So I think AVA as the platform for DeFi, or the Internet of Finance, will help a lot of these companies get there.
Yeah, that makes sense for sure. So when looking at some of the regulations that exist today and maybe where DeFi is tripping up on those, are there some in particular or maybe kind of some niches within DeFi that you look and you say, hey, if this gets too big in 6 months, 12 months, this is where they really struggle. And because of that inherent risk, how is AVA solving that?
So if you look at the categories of DeFi, let's just start with, derivatives. Derivative products are regulated by the CFTC, and they are in general, they have very deep markets in traditional financial services. So a lot of derivative products you see in the DeFi world, and I won't name names, they are not actually compliant and they're not actually properly functioning derivative products. For a derivative swap or a hardcore derivative product to really be effective, you need deep markets in the underlying securities, as well as the futures, as well as an option market to create these swaps, swaptions, or other products and provide the right leverage on top of that in order for people to come in and hedge. So a lot of these DeFi products don't have the necessary underlying markets in order for them to create an economically properly functioning product, nor do they have the same compliance level a derivative product in the traditional world will have. Again, what AVA is trying to do is to create compliant solutions, allowing governance at the ownership level and at the node level, so that these markets can become deeper, so that it can function in an economic way as they should. And then ultimately, financial institutions who care about regulation create their own private marketplaces or controlled environments where regulation is allowing this to happen in a very well thought through way.
Yeah, I want to jump into that node governance now and really talk technicals on AVA in general. I remember you talking about consensus in the beginning of the episode, how it went from classical Nakamoto and to now I believe it's Avalanche consensus. So I would love for you to go over that consensus mechanism there, as well as kind of the node ecosystem that's growing now and how governance is kind of forming on the network and where you see it going forward.
Great. So it all goes back to Professor Eamon Gunseer. He's been a distributed systems professor for longer than you and I have been around, so to speak. He invented his own currencies even before Bitcoin came about, and then obviously the rest of his history is kind of very well known. So in the history of consensus protocols, there's been basically two paradigms. There's been the classical, which is an everyone to everyone type of communication validation type of manner. So once you get past 100 nodes, the n squared level of communication gets very cumbersome and makes it kind of difficult. However, it is very secure. This is why a lot of private blockchains, Hyperledger, R3's Corda are built using that type of protocol. Then we had Nakamoto paradigm, which we all know they use the burning of energy and mining to become effectively the elongating of a block and the security and the validation of that, which is also an improvement, but yet we all know the deficiencies there in terms of making it more than just a store value currency. So having the benefit of being an OG in the space, Professor Gun and his team of computer scientists at Cornell took bits and pieces of each one of those designs and created this hybrid system, if you will, and created Avalanche protocol. And the Avalanche protocol is a proof of stake protocol. But again, beyond just creating a more scalable and a fast, low latency protocol, what they've done is basically design things in a way with a pragmatic focus, which is ultimately to create and issue tokens or digitize assets.
Interesting. So let's talk about the node ecosystem as it exists today and where you see it in the future. Obviously, governance is a huge kind of ongoing evolution within a lot of these proof of stake networks. So let's talk about how you got those initial validators, what the activity like on the network is, and then where you see governance going forward
Sure.
in general for AVA.
Sure. Before I do that, I just want to clarify one thing, because AVA is the underlying engine, and the AVA token is not necessarily where the governance is happening. It's happening on the what we call ants, which is basically the sub networks that created on top of AVA. Those sub networks, those private blockchains, can have their own token economics. They can create their own tokens. That's where their validators can set the rules that are governance and compliance and regulatory requirements based on their own standards. They use the AVA token for staking, for payments, for transaction fees, but the governance level for these private blockchains are done at the ant level, which is the equivalent of an ERC20 token on top of Ethereum. So wanted to make that clear.
Yeah, I did have a question there. Is there some type of relay that goes back to that base layer infrastructure? Or is it literally everything's happening on that subnetwork?
So that subnetwork runs on top of the base of AVA. And you have to pay with AVA to stake and to run things on the whole entire AVA network. But it is your own private, your own rules, your own nodes, and your own creation of your own token, your own VM, basically.
Got it. Okay, so if you can break down that node infrastructure now in the validators, that kind of happen within these subsets. What has it been like for those first few that have kind of spun up on the testnet?
Right. So the testnet right now is spun up on AVA itself. We will be spinning up subnetworks shortly, but on the testnet itself, we've got a whole bunch of validators that have come in, mostly developers. We are about, and when the mainnet happens, we're about to embark on community staking grants so that we can encourage a lot of different type of people to come into our AVA ecosystem and stake and be validators. So the answer to your question, it is early and it is growing and it's growing fast. And then when the mainnet happens is hopefully when all the explosive growth in terms of validators and staking will happen.
Beautiful. That's awesome. You guys are really close to that point. So congratulations on the success thus far. And,
Thank you.
We'll definitely be there to track some of the mainnet launch on the live episodes we do on Monday. We'll be sure to keep everybody updated on that as we move forward. Switching gears here a little bit, one of the first things I noticed when checking out AVA Labs website is some of the very impressive backers that have joined on and become investment partners with AVA. You've got Initialized, which is Alexis Ohanian's firm. You've got Polychain, which is arguably the most important fund in the space right now, or at least the most prominent. Andreessen Horowitz. What was kind of that process like going through in raising from those top tier, very prominent venture firms? Assuming you had some insight into how that happened, because I think there's a lot of folks out there who certainly don't have the experience of the founders here at AVA, but maybe have an idea and they're looking to launch a product. They're looking to go out and raise funds. So is there any sort of kind of background insight you can give us into what that process looks like with those top tier firms, or maybe just the process of raising for a crypto project in general?
Absolutely. I think ultimately the mission of the firm has to be aligned with how you raise money. And Gun was very clear. He wanted to raise just enough money to grow to a certain point in order to produce a product. And when he commercialized the underlying work out of Cornell, he said, what's the best way to get the most credibility and to raise just enough, as much money as I need for 2 years worth of growth? He didn't come out as a greedy crypto entrepreneur saying, I need to raise $100 million through a public sale. What he did was he thought through it clearly. What his ultimate goal was to produce product and to finish and commercialize his academic project into a real world pragmatic first layer consensus protocol. He figured out how much money he needed. And then using that as the barometer, he said, well, to gain credibility and to raise enough money to grow 2 years, what I need to do is do a Series A traditional equity with the right backers. So he went after those. We could have raised actually a lot more. He actually turned down a lot of money because in the same way he thinks today going forward, he's never at once thought about just raising money for the sake of raising money, unlike probably a lot of other projects out there. he's just been very focused. How much do we need to grow and get to our next milestone? So I think a lot of entrepreneurs out there, to answer your question, is how they should think about in terms of fundraising. They have to be very clear what their mission is. And their mission is to create a product. Sometimes having too much money is actually a bad thing. You start straying, you start going all over the place. You have to have helpful backers, and you have to have enough money to get you to a certain place, but you don't want to waste time raising money so that you can't get there. And he balanced all of that and decided this was the right path.
Yeah, that's a great point. I think it's often overlooked, especially after the ICO time, that too much money can actually end up being a problem versus a solution, because you just it's that more money, more problems issue, right? Like you start looking into all sorts of things that don't fit that mission, and next thing you know, you're burning through capital. Or
it's like a kid in a candy jar. I mean,
yep.
they'll eat whatever they can see. And there's been no correlation with successful projects in terms of at least churning out things that people use versus the amount of money they raise.
Guys, we have a lot of EOS followers on this podcast, so careful with the block one raise there.
Well, listen, EOS, I'm friends with a lot of people there. They were incredible. I mean, they were very revolutionary in the way they approached their fundraise. They also did in a time that probably can't be repeated today's day and age. And I think Mike was the one that asked about community, and I have to applaud them. Like, outside of Ethereum, they've done a decent job of creating a community. So, I think people think of this space as constantly like me against him, me against them. But like, I got to remind everyone, the entire crypto space is only 250 billion market cap, right? I mean, and equities in the US is 37 trillion dollars. Okay. So, and that's the smallest part of the financial system there. So it's a lot easier for us to all help each other and grow this ecosystem. There's a lot of runway. Let's not worry about taking from each other when the pie is this small. It kind of doesn't make sense to me, at least.
Yeah, for sure. I before I got into crypto, I was working in craft beer, and the theme was very similar until it kind of peaked.
It's kind of
there.
apparent in your background there.
Yes, for sure. Lots of whiskey here if you need a drink as well. I know it's early, but we'll get it done on that front. But there were so many kind of opportunities out there for these various craft breweries that for a long time there was really no reason to fight with each other. You were really kind of fighting the bigger Anheuser-Busch's and Miller Coors and whatnot. But anyway, you bring up a good point about kind of the scale of crypto or blockchain as a whole versus the larger financial market. And obviously you've got a very impressive background in investing and just, kind of your insight into the macro economy. So switching gears a little bit, talking less about AVA and talking a little bit more about kind of where we find ourselves. I would think that most at this point see crypto, see Bitcoin especially at this kind of inflection point, right? There's all sorts of issues happening in the broader global economy because of COVID-19 and because of so many kind of fundamental issues that the economy has not necessarily been able to fix over the last 10, 20 years. So, from your perspective, right, with your background, do you agree with this inflection point for crypto and for Bitcoin? Do you see there being a larger chance for adoption with Bitcoin, both within your more normal mom and pop users or those looking for a store of value, but as well as your larger financial institutions?
Absolutely. I think this crisis has only accelerated that adoption curve. First, look at it from an investment perspective, and then we can talk about it from an application and use perspective. From an adoption perspective, obviously the US dollar still carries, it's the reserve currency of the world. It has, it's the main medium of exchange. Everything is still priced in the dollar, whether it's a commodity, barrel of oil, or even gold when it's quoted in trade. And all the trade, 70–80% of it is done through the USD. And I don't think that is going away in the near term. Let's all just put that on the table right now. However, incrementally, there is no doubt that with all this money printing, so the Fed's balance sheet was about 4 trillion coming into this crisis. It had come down from 5 or 6 from the previous crisis. And last I checked, since then, it's spiked back up to 7 trillion. M2 money supply has gone up in almost equal amounts of 3 or 4 trillion dollars. A lot of that is still sitting there in marketable securities or cash equivalents. So that means there's still a lot of money that can be deployed into the markets. So when you have fixed supply of things and you print a lot of the demand, effectively the money side of it, there is no doubt that there is some sort of funky monetary system that is going to evolve, and it's not necessarily great. So I don't know if we'll have inflation in the economy as a whole, but I do see asset inflation in certain things where the supply is fixed, like gold, like maybe certain areas of housing, summer homes maybe, and yes, possibly Bitcoin, but definitely some fiat deflation. So it's harder to see here in the US because we are the reserve currency. But if you go to Latin America, since this crisis has happened, local currencies, whether it's the Brazilian real or Argentina, Venezuela, you name it, their currencies are down the magnitude of anywhere from 30, 40, 50%. The amount of activity that's happened in crypto via wallet increases, exchanges, or remittances have spiked a lot as well. So if we take our US centric hat off and we thought about ourselves in that context, you're damn right. I mean, crypto has really accelerated in terms of a different store of value and possibly a fight towards inflation, against inflation. From the application side, I'm not telling you anything you guys have not read already. A lot of central banks, maybe coincidentally, but right after COVID, have announced that they are trying to experiment and working with central bank digital currencies. So, and anecdotally, from our perspective, we talked about some of those inbound calls from enterprises and financial institutions. I think there is more than a little coincidence that after COVID, that the interest from these institutions have definitely heightened and the experimentation level has increased. So I'm not saying that we're there by any stretch of imagination, but it's definitely pulled forward the interest curve.
Yeah, COVID has definitely been a catalyst for a lot of things that maybe we're heading in a certain direction, but not so quickly. I think they're all kind of happening in succession now. But it's funny that we made it like 45 minutes into this episode and we talked DeFi and we didn't bring up stablecoins. But while we're on this subject of US dollar, it almost seems like stablecoins have flipped the Bitcoin narrative of people using Bitcoin in maybe emerging countries or maybe distressed countries like you're talking about, and for things like remittances. What do you make of stablecoin adoption in 2020 and 2019, and where do you see kind of stablecoins' role going forward? Will there be stablecoin support on AVA Labs?
Oh, absolutely. The answer to that last question, yes. And the answer to your first question, I mean, I think stablecoins are about 8 billion right now. I'm not sure the exact number, but they're about under 10 billion. I only see that growing because one of the things in this crisis, and even before this crisis, what people want is the characteristics of a typical reserve currency, which is less volatility. And there's enough money in the ecosystem of crypto that wants to park their monies at various points in more stable, less volatile type currencies. And the stable coin, if done well, will satisfy that. Bitcoin, we keep talking about it as a store of value, but it's still very, very volatile. I think the 1 year volatility in Bitcoin right now is still 80%. I mean, that is hard to be the ultimate store of value if the thing fluctuates that much. It definitely is hard to be a payment mechanism. I think we just anniversary on the guy who bought 2 pizzas for $80 million or something. So the stablecoin growth is a desire for that purchasing power and to keep that purchasing power in check. And if you have a volatile currency, unless the volatility is always going up, which it doesn't, as you know, it's too hard to do it with the Bitcoin. So that's part of the reason why stablecoins have become so powerful and so much interest in them. And I think that's going to keep growing.
Yeah, I'm interested from like team members within these networks or foundations, if they approach their network adoption on a geographic scale. Are you looking at certain areas that maybe you can really target for adoption, or is it more like, let's put this product out for the world? Maybe obviously target the U.S. with the purchasing power here, but also, just let this grow. Is there a specific targeted approach on certain locations throughout the world?
Yeah, I mean, we are global and we're decentralized, and we want people using our platform all over the world. But there is no doubt that, things are different in each geography. So in LATAM, our partners there are definitely more focused on stability and purchasing power. So we're helping those builders and enabling those builders to grow in that way. In the US, especially with financial institutions getting more interest, governance is more on the frontal lobe of everyone, and we're helping them look at our sub networks and how they can create their own validator sets and validator nodes. In Asia, it's a different focus. I think there's a lot of even more regulation than people realize right now. So every place is different, but our goal is to be a global community. AVA is a global community, but you're right, Zach. We do have to help the local interests and sometimes diversify our activities a bit for the local purpose.
Yeah, while you brought up Asia there, I wondered what your experience in that region is, and obviously what we've seen kind of unfold over the past week with Hong Kong and the issues that they're having with. I don't mean to get too political here. You can choose to pass, and maybe I'll throw you a softball COVID question. But if you can talk on the situation maybe that's unfolding in China as you see it, and maybe the relationship between China and the U.S. going forward, and how that affects global trade and crypto and all of these markets.
So let's not be political, but no softballs either. That's what makes your podcast fun. So this is a very interesting time right now between U.S. and China relation. And I don't want to offend anyone, but if we look at history and where superpowers actually basically compete against each other, I don't think people think of it as simply as just, a battleground war anymore. The battlegrounds are all over in terms of cyber, in terms of politics, in terms of trade. That is how the world is real. It's not just about, on the ground warfare. And there is no doubt that, in my mind at least, that the Chinese want global dominance, and global dominance is not planting a flag in someone else's territory necessarily anymore. It is, again, pecking away at the US dollar as a reserve currency, making it less influential. If you look at the share of GDP of the US over the world, we've gone from 60, 70% to now I think it's like under 30 or 40% now. It's probably around like 25, 30%. So over time, as the world has become more global, we have ceded a lot of that growth, if you will, or share of the global GDP. So I think in China's eyes, it's like, well, we are the second largest, about the second largest GDP country in the world. Why should the US have their currency be so dominant? Now, I think there's reasons why, and that can't be repeated anywhere else. It is because people trust the US dollar. We have a system of laws. We have a system that's helped grow in terms of innovation. We've had a system where there's eminent domain. Someone can't just come and take your property away. So I think what's happening with Hong Kong and the way China is kind of, in my opinion, overstepping what they promised the world when Hong Kong was handed over to them through the 1996 agreement between the British and China, is just a reminder to the whole world that if you don't have that trust, you are not going to be able to have that power base and economics around the world. And that actually, in a weird way, in the medium term, will just make the dollar actually stronger.
Interesting. Yeah, it's fantastic insight. I know we've kind of been jumping around in between, your more kind of global economic outlook and AVA Labs, but certainly based on where you sit and your background, it's very appreciated for us. And these are some big questions that we kind of throw back and forth internally here. So, we've got a few minutes left here before we've got to let you go. Like I said, we've really touched on AVA and a lot of the customizable features that exist there. The really ability for AVA to exist as both a public network and a private network for those, say, DeFi developers, and for those more enterprise focused kind of private use cases. Is there anything that we maybe haven't touched on? Any questions that we haven't hit you with that you see as really important that people understand regarding AVA?
Well, I think the most important thing that everyone needs to understand about AVA is that we are very purpose driven. And I think we touched upon this. We wish Bitcoin well. We wish Ethereum well. We are not trying to go out there and be ETH killers by any stretch of imagination, kind of like the other first layer coins are. I mean, it's my view, and I've already expressed this, like it's a growing pie. And the fact that, ETH 2.0 comes, even though we have a lot of functionality that's similar to ETH 2.0, that's only going to draw more people from the outside in. And that's the only way we're going to get 250 billion of market cap closer to 37 trillion of US equity market cap. So I think that is the main point I want to emphasize. And then I do want everyone on this podcast and anyone listening to come test us out. Go on to the test net. And then when the mainnet comes, come check it out. Come to our website. Look at, AVA Hub, where there's all the projects going on and where you can get grants for doing things in the AVA ecosystem, and check us out for yourself.
Yeah, I'd love to talk about those grants that you're offering up to this point. I think I saw up to 250,000 for certain grants within the AVA ecosystem. Can you break that down for us right before we finish up here?
So yes, so far we've embarked on these grants programs. It's been about a month and a half, not that long. What I will say, since we're running out of time, is they need to see what are the grant programs that will be coming in the next month or month and a half as we approach the mainnet. Because yes, there are some large prizes there, but there is going to be even greater potential in the next month or so.
Amazing. John Wu, this has been a great episode here. We have one last question that we ask every guest. I don't know if you saw it when you listened to the last episode, but it is a book recommendation. It could be crypto. It could not be crypto, nonfiction, fiction, whatever kind of, tickles your fancy, if you may. What do you have for us for a book recommendation?
For this audience, I have a lot of book recommendations, but for this audience, I'm going to go back to a book that came out 2 or 3 years that a classmate of mine from Harvard wrote with Reid Hoffman, and it was called Blitzscaling. So they wrote that book and talked about how to blitzscale a startup in the Silicon Valley way. The reason why I think that's interesting is because if you think about blockchain and crypto and token economics, if you really want to blitzscale something and create a network, this is the best business model. They can write as many books as they want in that ecosystem, but when you can create marketing, development interests, community interests, and fundraising all into one public sale of a token, there's no better way to leverage and scale one activity, a public sale of a token, than in the crypto world. So you want to blitzscale, read that book, and then think about what the crypto world can do in terms of blitzscaling when done right.
Got it. Yeah, that's a fantastic recommendation. I've heard that somewhere else before, so good to hear that again. And I'm sure that's a great one. And like you said, as it relates to crypto there. So again, this has been an absolutely wonderful podcast. We really appreciate the time. For those developers or enthusiasts who want to learn more about AVA, what's the best place to start? Where's the best place to go?
The website, avalabs.org. Go there, or you can follow Eamon Gunseer on Twitter, and you'll get more than you need.
Awesome. All right. Well, thanks again. We'll definitely be sure to be following AVA and keeping everybody updated there as you guys move forward with a lot of the community grants and obviously with the mainnet launch. So congratulations on the success thus far, and thanks for the time.
Thanks, Mike. Thanks, Zach.
Hey guys, we hope you enjoyed today's episode. Make sure to check out Layer 1 on all the audio and video platforms listed in the description. Thanks for stopping by, and we'll see you next week.